The event will begin shortly. We are waiting for all our guests to join the event. Thank you for your patience. The event will begin shortly. We are just waiting for all our guests to join the event. I really appreciate your patience. Okay, hello everyone. My name is Shubham, and I'm the moderator for today's event. And I would like to welcome you all to today's webinar, brought to you by WE.VESTR on Equity Management 101 for Founders, a simple guide. This webinar will begin with a presentation by Floris van Hogenhuis, CEO and co-founder WE.VESTR, followed by a Q&A session just after the presentation. So now I'm super excited to introduce you to KiwiTech, a one-of-a-kind innovation ecosystem that's home to 500 plus portfolio startups and 300 plus mentors, all committed to supporting innovators globally. It all began in 2009 when a team of seasoned entrepreneurs who had previously built and scaled a publishing services company for a 9-digit exit decided to start another company to empower startups with innovation. So without wasting any more time, I would now like to invite Floris van Hogenhuis, CEO and co-founder WE.VESTR. Hi, Floris. The screen is all yours.
Hi, Shubham. Thank you.
Wonderful.
Let me share my screen. Yes. There we are. Perfect. There we are. So thank you for the stage again, Shubham.
Okay.
So yes, welcome to the Equity Management 101 webinar, a refresher guide for you founders. So first bit about me. So hi, Floris, co-founder, CEO of WE.VESTR. I founded 2 property tech companies. here in the Netherlands as of 2012, and recently founded and exited Barco. That was the venture before WE.VESTR. And Barco was the biggest, is still the market leading platform in the Netherlands for boat rentals, peer-to-peer and commercially owned. Got acquired last year by our British competitor. A bit before that, I already sold a part of my shares and started something new, WE.VESTR, based on my experiences from all of my previous companies, where I over and over bumped into inconsistent shareholder management. There was a big struggle to manage my cap table in a clear way for all the stakeholders and investors. Was an enormous struggle to manage my employee stock ownership plans. And even reporting was done in a very old school way with sending over static PowerPoints and PDFs. And that's where we created WE.VESTR to bring all those elements in one interactive environment. And we'll dive a bit into the dynamics of the platform later if you guys have some questions. But topics for today is, first of all, how to create your first cap table. Then we'd like to go into some ESOP basics, so employee stock ownership plan basics, and we'll close with some tips for your ideal shareholder reporting. So wait a second. Yeah, background on WE.VESTR. As I already mentioned, we centralize all those elements like cap table management, your loans, convertibles, cap table scenario modeling, KPIs, financials, legal documents, and employee stock ownership plans all in one centralized environment, which gives us a few value propositions we currently have. First of all, we also have a feature where you can really easily reward and distribute equity at the very early stage based on the contributions you make before actual tax event occurs. And that's rewarding your future equity in a pre-investment stage. Next to that, when companies are further in the life cycle and they're already fundraising, I assume some of you are, companies use it as their interactive data room for fundraising. Then companies even further in their life cycle already have stakeholders and shareholders on board they need to report to. They use it as their day-to-day reporting environment to provide transparency to those shareholders. Then we have some customers who also explicitly use it for their ESOP management to seamlessly and digitally manage their ESOPs and equity plans in one clear environment for on admin level and on participant level. And then we also have the first investors who we now collaborate with who use it for their portfolio management. So that's a bit about WE.VESTR. So let's get into creating your first cap table. The basics. I'm sure everyone is aware of this. We like to refer to, but it's good to start off with. We like to use the analogy of a pie, where their cap table is the actual picture of your pie. So it's really the outline of the company's ownership. Then you have the shares. Those are the slices of your pie. So the actual ownership of the shares is the equity to the shareholder. Then you have the share price, which we like to refer to as the price per that slice. So that's the market value of the company shares. And the valuation is the total value of your pie, which is the estimated value of the full pie. Either it's pre or post money or pre or post pie. And of course, the rounds, and that's the history of your pie. What took place to actually come to the certain consistency of your pie. So when were the shares issued, sold, and purchased? So what different kind of shareholder types do you have? Well, first, a lot of founders, they start off with friends and a triple F round, which is an abbreviation of friends, family, and fools. So those are your first investors, usually in really relatively smaller investments. Then you move to angel investors. Those are the early stage investors. Usually those are individuals with their own portfolios and already have built up a certain expertise in a certain domain. Then you have VCs, the venture capital firms. They are the early funding firms. So they fund at a professional level in riskier and younger startups. Then you have PEs, private equity. Later funding firms, they generally invest in more seasoned companies. So already the established and proven winners, and they have institutions like banks and pensions, and that's more for the long-term funding on behalf of large groups. And when you dive into the shareholder rights, all these different shareholder types could have. These are the most common shareholder rights you will find when raising a funding round, when raising funds via any round. So first of all, liquidation pref. That's when certain shareholders receive priority in being paid out in case of any liquidity event. So when a company exits, they get paid first, second, or third, for instance, before the others get paid. Usually early stage investors get this liquidation pref, like angels or even accelerators. Then, of course, voting rights. What voting rights do the shareholders have? And this can be very flexible and dynamic. So shareholders have the right to vote on the company's bylaws. Board members can be determined rather flexibly within a certain funding deal. Then you have tag-along rights and drag-along rights. Let me start with tag-along rights. So that's really to protect the minority shareholder, where they can sell their shares, actually tag along with the larger shareholders in the event of a majority shareholder, when a majority shareholder sells. And the drag-along rights are to protect the majority shareholders, where they can force the minority shareholders to sell their shares in case of a company merger or sale, for instance. And then preemptive rights, which means, you also see this very often in funding deals, is when existing shareholders can buy newly issued shares before it's offered to others. So they have the first right to buy it at a good price. So let me start with the tips. So first of all, it sounds like a no-brainer, but this is really, really important. Collaborate with your shareholders. So what do you need to keep in mind here? Transparency first. So really create transparency with your shareholders. Collaborate with them in drafts of your first cap table and really show them the implications. Your shareholders are generally no fools, and well, if it concerns angels, they're seasoned. They know they know the dynamics of a deal. So show it to them, and they might have good advice. Second of all, shareholder insights. So really know what information your shareholders find most valuable on the capital. What do they want to see? The share amount, share price, investment amount, which share rights. Do they want for you to display the round name, round date, company valuation? Are there any ESOPs, so inclusive ownership plans, or any option plans, or any other ownership plans you need to take into account? That's really important. So discuss what you really need to show and what insights you need to provide. Second of all, you don't need investors to have a cap table. This is often this is a misunderstanding, because you can already start with startups. Can just get started when they're bootstrapped. And you don't need a cap table, actually. And it even boosts collaboration already, because you having a cap table will really prepare your conversation with investors in the future and will enable you to scenario model future fundraising. So start with it as soon as possible, as it will boost collaboration. And slicing pie, this is when I described the different value propositions of the platform. I started off, you may remember, with an early stage way of distributing the equity within your founding team. This is called, slicing pie. We actually adopted this methodology. It's very what's gaining a lot of popularity in the US, now also in Europe. We obtained European distribution rights for this, or also have American, US customers using this feature, where it's very easy to set up your cap table based on contributions. And we digitized that in our platform, and a method like slicing pie will help founders plan how they'll reward the future equity to all of the current and near future stakeholders. Are there any questions so far, Shubham? No? Okay, let me continue. So the third tip, guys, use software to save time. Why? Well, of course, it's what we do. but it's and why we founded the company. But it's super important. First of all, because of transparency. So whether you use WeVestor or another platform, it really helps the founders, you build cap tables quickly and create transparency with your shareholders. Second of all, equity planning, super important as well. Pre-investment startups can already use the slicing pie feature to plan out their future equity. And it's very important also to establish trust and to show that you know what you're doing when you already have a certain equity plan in place to your existing and to your future shareholders. And then scenario modeling. This is often what goes wrong in the process of fundraising, when founders and investors are not aware of the implications of a cap table, and there should be more collaboration in this and more insight. So you should model different scenarios and review the different implications. And startups with investors, they can already build the cap table and run a scenario modeling feature. And lastly, ESOP management. I experienced it myself, also with the cap table management, but also ESOP management when it was in my previous companies, a big mess, having all these option plans existing in a cloud environment and not in one clear environment, a platform, interactive platform where all these plans were structured on ground level and on a plan level and a pool level. And that's what we're also creating here, to have that one centralized environment where you can manage it on administration level, so as founders and investors, but also where participants have individual access to their equity plans, to their ESOP employee stock ownership plans, and where they can also play around with it and see what it's worth and how their vesting cycle is progressing, etc. Then let's dive into some ESOP basics. So let's first start with some basics, really basic things here. What are the first things to consider when you're actually starting creating an ESOP? So first of all, who do you actually want to participate? You have to ask that yourself and discuss absolutely with your co-founders. Who do we want to participate, and not only with your co-founders, but potentially also with your investors, because generally it's quite a chunk of equity that you reserve for such ESOP plan, generally 10 to 15%. How much do you want to share? Well, like I just explained, and what type of incentive plan do you choose? Because we'll dive into it, but there are quite some different plans. So what are the most common incentive plans you have? Well, first of all, let's start with the incentive plans which don't have an impact on your cap table. That is either a bonus on KPIs or actual virtual stocks. So virtual stocks can be converted in the exercise of an exit or an IPO, for instance. But until that moment, no one will receive actual shares. So it's commonly used, but it doesn't impact your cap table, and it has pros and cons, but it doesn't impact your cap table immediately. Then, of course, you have stock options, depository stock, and ordinary stock in companies. So also here, what are the general, the terms, what we generally see within an ESOP plan, which you need to take into account? First of all, vesting, and the most common, the most common agreement on the vesting between a company and its employees is 4 years of employment. So the vesting actually is the time that people, in what time people should earn their rights. So hypothetically, 1%, if the vesting is 4 years, they will build up every year 0.25%. And then we come to the cliff. And the cliff, most common practice here, is 1 year of employment. And this is basically what you expect as a minimum effort. So a cliff is if you agree on a vesting with 4 years with a cliff, including That means that the employee first has to work a year, and then they will receive their 0.25%. But if they leave earlier than a year, they will leave the company without any equity built up. But if you exclude the equity, then they first have to work a year, and then they start building the equity. So that will take 5 years. And if you include the cliff in the vesting, then they will have 4 years of equity building. And that is actually, you protect yourself as a founder in a company when you have early leavers for whatever reason, that they don't stay on the cap table with a generally high stake for relatively not a lot of work they've done. Then you have a bad lever or a good lever, and a bad lever is most common cases here if it's a real sabotage. And that should be really a point of attention when creating an ESOP, to really define what a bad lever is. You often see it go wrong here, and there's often a lot of discussion whether someone is a good or bad lever. So really try to define it as clear as possible. And a strike price. So that's basically is from what a stock valuation. What stock valuation on the people profit. So what's the price they're allowed to purchase the options. And most common here is the fair market value on the starting date. So when they start with their vesting schedule, their equity plan, for instance, now on the 12th of September, now you determine a strike price, and if they execute it in a year or 2 years, they will still have that strike price. So that if things go well, that relatively a favorable share price instead of a share price in 2-3 years, which should be much higher if the company performs well. And then an exercise moment. Well, the most common here is when a company exits or IPOs, and that's when people can cash out. So here, what are the ESOP basics? Communicate. A tip here is to communicate amounts or instead of percentages. You see this often go wrong because dilution takes place over years, and then employees might think or other stakeholders that they obtained a certain percentage, but they don't take the dilution into account, and that often goes wrong. So it's generally it results in a lack of clarity, and it sets an intransparent precedent, like I just explained. It's good to first determine how much definitely within your founders environment or your founders group or your with all of your stakeholders, how many percentage do I, for instance, in the end want to reward our new CTO or CPO with, etc. But then always translate it back to an actual amount and include that in the ESOP letter to the employee, so there are no misunderstandings. Because with a startup environment, within a startup environment, so many dilution takes place with different investment rounds. So really stick to communicating that numbers, that percentages. And of course, a result is lack of transparency and unclarity, uncertainty impacts your culture. And that's not something you want. Then last topic for the day, tips for your shareholder reporting. So this might also be a no-brainer, but you definitely see this go wrong very often, is to clearly set expectations. So what to keep in mind here, the frequency. So what schedule are you going to maintain for your shareholder reporting, and keep to that frequency. So do it every month or every quarterly, and determine that with your shareholders in advance. So most common schedule for shareholder reports is quarterly, but it can, it's for smaller startups, it definitely can be monthly. Secondly, transparency here is a keyword again. It's so important, transparency also here. So really clearly communicate how often you'll be reporting in advance. So like I just mentioned, who will be, and definitely who will be included and what data will be included. So really set those expectations. And thirdly, but not least, targeted distribution. So really be specific in who will receive the reports and encourage the collaboration between you and others who will receive it. So really be open to feedback loops. And like an investor deck, reporting is an art. It's never finished. You can always optimize reporting and really strive for an even better way of communicating things very clearly. Second tip here, make it easy for shareholders to get access. Well, that also relates to WE.VESTR, of course, and why we built this company, this platform. But what to keep in mind here is accessible data. So shareholders frequently reference past reports. So make it easy for them to find the data. And what I experienced from my previous companies, that it was such as during shareholder quarterlies, people were looking back in what was reported back then. So yeah, really create this environment, whether it's WE.VESTR again or another platform, where you give them that interactive view where they can easily go back, because emails get lost, PDFs, slide decks deleted, and it creates a lot of hassle. And also very important, centralize that all. So save time and back and forth communication by consolidating the reports into one single and above all secure environment. Really look if any reporting tool also has their security certifications, like an ISO, for instance, so that they really value your data. And that's also absolutely very important to check, double check, and give that your shareholders and whoever you want to report to easily access to that centralized environment. Third tip, daily summaries versus trend data. So really make your reporting, create a concise reporting. So reporting on day-to-day activities is definitely fine, as long as it's concise and in a clear and you report it in a clear overview. And this really depends again on the relationship with shareholders, but some businesses definitely require day-to-day reporting, because they're at a certain stage in their life cycle, because a lot's going on, or due to the nature of the business. And that's nothing wrong with reporting it daily, but do it in a very concise way. And secondly, also, well, interesting to visualize the trend segmentation. So larger financial, marketing, sales, overall trends, they should be separated out so that shareholders can actually skip to the KPIs they're most interested in. And that can be segmented in, well, a KPI dashboard, like we offer, but also other platforms would have that, I assume, where you can really create easily the categories and add the line items to it yourself. And fourth, this is a very important one, which absolutely a lot of founders ignore. Is good or bad, it's all relevant, because here again, keyword transparency, transparent disclosure. So don't hide poor performances or negative data or whatsoever, because eventually when it comes out, it will damage your relationship. And you can really always keep in mind that every startup has poor performances to report to during the year. Everyone experiences that on different levels. So it's absolutely not a bad thing, and really see it as something you need help with, that you can create collaboration around. So they are, and that relates to my second point, they're here to help you. So really showing those pain points often can lead to greater collaboration and advisory. So really use your shareholders and advisors here. And lastly, always provide takeaways and next steps in your reporting. So give them actionable insight. So reporting should signal your overall focus, and really include those key takeaways for the shareholders, as well as actionable next steps for them to review. And definitely a second takeaway here is strategic alignment. So really try to align reporting with the overall vision. So what is the big vision of the company, and how are we moving towards that end goal? So are we still on track? Those were that was the last tip of the shareholder reporting already.
Wonderful. Thank you so much, Flores. That was a great presentation, and I personally learned a lot from him. And just to bring attention, we've been streaming live on our social media platforms as well. So we have a few questions for you. So let's start with the first question that we have on Zoom. It's like 4 years vesting in ESOP from the date when ESOP created, options awarded, or from when employees started working. So I guess this question is related to a slide, I guess, one that you shared.
When the employee starts working, because usually then it depends when you have a new when you bring someone on board, and when the ESOP is included in the job offer, then basically it starts when they start their job at your company. But you also you can have employees already in your company, and you decide to launch an ESOP, maybe with an employee already 2 years active for your company. Then it doesn't start at the moment when generally, it can be the case, but generally it doesn't start at the moment when they started at your company, but at the moment when the ESOP gets launched. But you can always use a sort of retroactively cliff, apply retroactively cliff, where you do give them those favorable terms.
Well, thank you for answering that. So adding to that, there's another question which says, what's the biggest benefit of an ESOP?
Well, it's to really boost your employee engagement. Absolutely.
Okay, wonderful. So let me just have a look. Okay, so there's another question which says, what's the difference between virtual and phantom shares?
Nothing actually. Those are often phantom shares are virtual stock. Those are two different terms, but for basically the same share type.
Right. Thank you so much. And can your platform cater for multiple layered scenarios as well?
Yeah, absolutely. In the basics. So what we currently have are scenario modeling. You can on the platform, you can enter a pre or post money valuation, and it calculates based on that. Based on a new a hypothetical investment round, pre or post money, it calculates the dilution of your cap table, and it also takes already convertibles and safe notes into account. And next step, what we're working towards in the next few months is that we will also provide waterfall distributions in the scenario modeling feature, where you can create exit scenarios. But our ICP at the moment are pre-seed to early growth, so Series A plus companies, which some of them exit, but not all of them. But we're growing with our customer base as well. So those are important things on the roadmap.
Okay, wonderful. And since you mentioned something about cap tables, so we have a question which says, can someone see the cap tables by rounds?
Yeah, currently you can see them by rounds. And also, so you can see who invested in which round and which amount, and what was the share price and the valuation. Okay. Next step within the cap table management feature, which we expect also to launch soon, we're already working hard on it, is where you can enter any moment in time in the past, and it will give you the situation of the cap table at that moment. So historical rounds, but you can already see the buildup of the different rounds.
Okay, great. Thank you so much. And also, can you invite investors to see your platform?
Definitely. So we have a pretty comprehensive stakeholder management feature where you can invite all the stakeholders you would like access to have access to our platform or to the WE.VESTR platform. So that can also be a notary or your legal specialist or employees to update the KPI section or financials. And it's very flexibly set up where you can determine the viewing rights per stakeholder, what they see. So, for instance, an employee would only like to see them their personal ESOP and maybe the KPI section, but not the cap table and the financials, where you can adjust those settings, and then they will have their private environment with the only sections they're allowed to see.
Great, thank you so much for that clarity. And let's just end this with one last question, which says, what accounting software do you already have an API with?
So currently Xero, QuickBooks, Exact, and based on the requirements of leads and customers, we're making more connections. It's fairly easily done.
Great. Thank you so much for answering those questions. Let me just check, have a quick look at the social media if we have any more questions for you. I hope you're not tired by the questions that we're asking.
No, of course not. Go ahead.
Wonderful. Let me just have a quick look. Okay, I don't see any more questions incoming. Guys, we have a mentor right here. If you have any questions, you can just drop them in the chat box right now or on our social media platforms as well. Let's just wait for a minute if we have any more questions, or else we'll move forward. Okay, meanwhile, we wait for our questions to come in. I would like all of you guys to bring your attention back to the screen. We have recently introduced a referral program at KiwiTech, and this program rewards anyone who contributes to fruitful introductions to our company. So if you know someone looking for a tech development support to scale, join our referral program and follow the mentioned steps shown on your screen, or visit our website mentioned in the chat. It would be www.kiwitech.com/referral-program to learn more about this. Contribute to our growth journey and learn incentives for your trust in us. So Flores, I don't see any more questions coming in. So if you have any questions, we will certainly reach out to you again with those. And with that, I would like to thank you, Flores, and all the guests for joining us today. And we will be back soon with such more webinars. And I would like to bring back your attention once again on the screen for all our upcoming events. We host events on a weekly basis, and we hope to see you again at some time on one of our another virtual events. And we post this about on our social media platforms. So if you want to register for any webinar or any events, just follow our social media platforms as well. Till then, take care and stay safe. Thank you and have a great day ahead. And thank you, Flores, again for your time today.
Thank you. My pleasure.
Pleasure hosting you. Have a great day.